Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Mark Yaxley. He is the Managing Director at Strategic Wealth Preservation. Welcome back, sir.
Ivan, always good to see you. Thanks for having me back.
Yeah, it's always a huge pleasure you coming down to Wall Street Silver. It's been a while since you've been on, but I wanted to get you on to talk about everything happening in the silver and gold markets. First question I have for you, Mark, is what do you think are the key factors that drive the prices of silver and gold in this current economic landscape?
Yeah, we've seen a lot of central bank buying over the last 6 to 12 months. That's been a big driver. It's kind of created the floor for the gold price, especially, and then that drags along the silver price along with it. With the central bank buying, I think that supports or encourages retail investors and even bigger firms to start diving into the gold market because they see that a trend is developing with this driven by the central bank. So
Right.
that's probably been the most notable trend that we've seen. We've seen a lot of buying from China over the last, again, 6 to 12 months. Not only their central bank, but also their retail exchanges have been very, very busy. And
Right.
it's just started to cool off over the last few weeks now.
Now, do you think there are any specific indicators or signals, Mark, that investors, should be watching for when considering silver and gold investments?
Yeah, definitely. I mean, one of the things that you want to look for, aside from obviously the price and the price trends, and what you'll see there is you see pretty solid footing for both gold and silver at their current prices. So it's a nice little pause right now. People can kind of catch their breath. But
Right.
one of the things that you're going to want to be looking for is the effects of inflation and the inflation numbers that are still coming out. If you look at gold and silver for the same argument, but really gold is the best indicator there. If you look at inflation over the long term, what you're going to realize is that gold really does hedge against inflation nicely, even though there's a lag. It took a while for gold to kind of catch up to the inflation that we've been facing over the last 2 to 3 years, but it's done a really, really good job of that. And if you kind of spread that over like a long-term macro view, you'll see that gold actually hedges really, really well. So long as inflation is still an issue, you're going to see the gold and silver prices continue to appreciate. So that's definitely something that I'd be looking at. I'd also be looking at headlines surrounding elections right now because you've got over
Yeah.
60 national elections worldwide happening this year. The UK, France, obviously the USA are big ones, and that's going to create quite a bit of volatility in the market because you're going to see a change in regimes in the coming months. So something to keep an eye on is how those play out.
Yeah, and can you elaborate, Mark, on, the various ways in which individuals can invest in silver and gold? Like what other ways can they do it? Because we're all silver and gold stackers here, but what are the best ways?
Well, in my opinion, personally, I do think physical is, at the end of the day, the best way to own gold and silver as personal property and remove any kind of third-party risks that come with it or uncertainty. But you can certainly look at gold ETFs. That's a tool that I've used many times over my life, especially when I have a shorter time frame. If I think that the market is going to be up in, the next 3 months, I might go and do a gold or silver ETF, and you can buy those through your bank or through any regulated financial institution. There's a lot of options out there. The other way is obviously mining stocks. That's maybe a trickier play. It's something that you
Right.
have to invest a fair amount of time and gather knowledge and expertise because there are a lot of options, especially in the junior mining space, and a lot of those won't pay off. Those bets won't pay off for you. You might pick 10 juniors and only two of them will really hit. So if you're going to go down that road, you can either get into a fund to make your life a little bit easier, or certainly read some newsletters and follow some people that have been investing in the mining space for a long time, if that's the route that you choose to.
Yeah. And you were talking about central banks. Central banks have been buying so much gold right now at record paces, Mark. And the price of gold has been really going up and even silver has been following. This is the first year in such a long time that we broke $30. So do you see it going high? Like where do you see silver and gold going from now to the end of 2024?
Yeah, I mean, the consensus amongst market analysts is that the gold of both gold and silver will be higher this year, which is encouraging. Like you said, it's
Right.
it's been a long wait, especially for silver investors. So it's nice to see some of our clients and your followers finally catching in or recovering even some losses because some people bought
Right.
back 2010. But the consensus right now is that gold is likely to close out the year between 25, 2600 US per ounce. So we've still got another 8-10% gain there for the year.
Right.
And then silver, that'll probably drag silver up anywhere from 35 to $40 an ounce. Now, there's never any guarantees. There's going to be a lot of change over the next 6 months with all these elections that are taking place and economic reform and things like that. But I'd say it's a pretty safe bet. I've said this many, many times over my careers, the potential upside always outweighs the potential downside for precious metals because
Yeah.
you've got things baked into the cake like inflation, like government deficit spending, all these things, and obviously conflict, Ukraine, Gaza. These are just examples of ongoing kind of human behavior. So, long term, can you really lose? No, but you have to be patient in the metals game for sure.
Yeah, absolutely, Mark. And how long do you think the US can kick the can down the road? They have an incredible amount of debt, trillions and trillions in debt. That's just astronomical. People are comparing now to like the Roman times when the Roman Empire fell apart and it collapsed over time because their value of their currency in the Roman times was devalued over a span of years, same as the US dollar, and then they lose their power. So how long can they kick the can down the road, Mark?
Well, I think you hit the nail on the head. The US dollar is being devalued every day. So
Right.
they're not kicking that down the road. That's happening right now. And if people don't understand like the effects of inflation on their portfolios and their savings over time, that's the first place to go educate yourself and try to start protecting yourself. And gold and silver can do a good job of that. But how long can they kick it down the road? Look, they are the absolute best in the world at kicking it down the road, and they will fight to the very end, just like the Romans did to try to retain their supremacy when it comes to banking,
Right.
international finance, the influence that they have because the world is dependent on the US dollar. They will literally fight to the death. So I would estimate that's going to go on for decades. I don't think this is something that's going to be changing overnight, but you do see, fairly early stages of change, whether it be countries like China leaning away from the US dollars, Russia obviously leaning away from the US dollar, and other BRIC nations that have kind of pledged to start trading amongst themselves in other currencies and are already doing that. It might be a slow death, but I think it is somewhat inevitable. But they will kick that can as far as they possibly can, for sure.
Do you think if the Romans back then had nukes, they would use it to stop the collapse of their economy and their because that's a possibility.
That is such an interesting question. I hate the idea of anybody threatening to use nukes or using nukes, but geez, it seems to come up a lot these days in dialogue
Right.
amongst government. Will that be Putin? Will it be Donald Trump? I don't see it being Donald Trump, so I don't see the
Yeah.
US being the ones to kick that off. But it's, when you've got guys like Putin meeting with Kim over in North Korea, it's
Yeah.
certainly
Because if
times.
they're facing ultimate economic collapse and they don't want that to happen to their country, they'll just let it off.
Yeah. I mean, I think with the nukes, it comes down more to mutual scare tactics, right? It's
Right.
like
Mutual destruction. Yeah, yeah.
mutual destruction. So I think for that reason, they might not do it because it guarantees their own destruction. But will they invade countries? Will they remove people of power that are harming to their motives? They've proven that over the last 100 years, they're willing to do it. So I think that'll continue. So there's probably a lot more skirmishes along the way, and that
Yeah.
just ties into the overall message as to why you want gold and silver. You've got all this volatility in the world, and I expect over the next 2 to 3 years is going to be a significant amount of volatility with all the changes in government that are coming.
Yeah, absolutely. And Mark, talk a little bit what you do about at strategic wealth preservation. What do you guys do? What do you guys offer to people?
Yeah, I mean, pretty straightforward, really. We offer investors the opportunity to buy and sell physical gold and silver, and we also store it for them. We're up to 11 locations worldwide that we offer, two in Canada, Toronto and Calgary, now five in the US. We just launched the Wyoming vault, which is pretty neat state. If you don't know a lot about the state of Wyoming, they're very hard money friendly, put it that way. And we also offer international locations like Cayman and Zurich and Singapore. So these are places where people can buy and store gold and silver over the long term and eventually sell it back to SWP.
Absolutely. Mark, it's such a huge pleasure having you come back to Wall Street Silver and talk to everyone about the gold and silver markets. But before you go, I have one last question for you. In what ways, Mark, do you think that, eventually the technological advancement of, the shifts in consumer behavior affect the long-term outlook of silver markets? Like, let's say in the next 10 years, China needs more demand for silver. There's not enough silver mines. How do you think that'll affect the outlook?
I mean, only positively. I mean
Yeah,
if you're a silver investor, you're definitely looking at the different ways that silver is used in technology, and I mean, it's so varied compared to gold. So it makes a strong argument for silver. It just
right,
strengthens the argument. I don't see that changing based on the uses that it has today. So you got medical, and you've got the solar, which is a growing industry. There's a lot of silver
right.
that's in solar panels as well. So yeah, probably pretty encouraging. And like you said, there's actually, I wouldn't say a shortage is probably not the right word, but a decline in the mining output for silver right now. And the same is true for gold. So the fundamentals even are setting up pretty nicely for gold and silver as well.
Yeah, absolutely. Again, Mark, it's such a huge pleasure having you come down to Wall Street Silver as always. We'd love to have you back on more regularly. So yeah, I would, thank you so much for coming down to Wall Street Silver.
I always appreciate it, Ivan. Keep up the good work.
Awesome. Talk to you soon.